Hello and welcome to another video by Touchstone Financial Education. My name is Elliot Cox. I'm the Chief Content Creator here at TFE, and our mission is to educate folks just like you on all things investing and retirement. Whether you're just starting out your career, you're in the middle, or somewhere near retirement, you need to figure things out, please reach out to us at touchstonefinancialeducation.com. Send us an email and we will get back to you within 24 hours. We've also got classes and they are a lot of fun. They're very interactive, and you can go to the website again, touchstonefinancialeducation.com, to check out the classes. Now, on to the show. Today, we are talking about how to get started. This is called Investing for Beginners. So if you are a sophisticated investor and you're already doing your thing, this one might not be for you, but guess what? We've got older podcasts and videos that will fit squarely within what you're trying to look for. So today, beginners, please listen up, because we are going to help you take those first steps into investing for retirement, as well as what I like to call interim goals. Anything that you want to invest in for buying that home, taking that trip, maybe buying holiday season presents, whatever the case may be, we're going to cover the first few steps today. Now, to get started, we need to look for a platform. The second thing we need to look for is the type of account that we want to open, and then of course, how to invest that money. So again, platform, type of account, how to invest the money. So, and getting started on step one with the platform, there are 4 platforms I'm going to cover today, briefly, of course, because we've got a lot to talk about. We've got Vanguard, we've got Fidelity, we've got Charles Schwab, and we've got E-Trade. And the difference between the 4 is that the first 2, Fidelity and Vanguard, are made for beginners, and of course, Schwab and E-Trade are made for more moderate to sophisticated styles of investing, which I will get to in a second. So let's stick to that beginning first step, Fidelity and Vanguard. They are excellent for beginners because their platform is laid out in a simple to follow manner. Customer service is excellent. They've got a great choice of investments on their own, and you can invest in anything else you want to on their platforms as well. And the reason I like it for beginners, to be honest, guys, is that it is designed for that buy and hold strategy. So if you are new to investing outside of your retirement plan at work, these platforms, Fidelity and Vanguard, are great ways to get started with that buy and hold strategy. And a couple of the most popular funds out there, whether it's Fidelity, Vanguard, whatever, is the VOO or Vanguard S&P 500 Index Fund, or their Total Stock Market Fund. Again, Vanguard Total Stock Market Fund. And by the way, Fidelity also has those funds as well. And then I'm going to throw this in there because the markets are doing so well. The Triple Qs, which is the NASDAQ 100. Phenomenal performance the last year and a half. It is very tech heavy. So if you are younger or you want more aggressive performance, check out those Triple Qs, or again, the NASDAQ 100. Now, we got the platform down for the beginners. Let's go on to the sophisticated side. Charles Schwab and E-Trade. If you are interested in getting started with stock investing, or maybe learning about options, these are the platforms you are going to need, because they provide a ton of metrics designed for stock investors. You can do things like create watch lists. Oh, and by the way, of course, they have excellent customer service as well. But again, more sophisticated forms of investing. So stocks, options, currencies, the new cryptocurrency ETFs, you can get them through those platforms, as well as learn a little bit about them along the way. But as we're focused on the beginners today, I'm just going to say that much about those 2. In future podcasts and videos, we'll get more into what those platforms provide. But remember, today is about beginners. This is Investing 101. So we've got our platform chosen. Now we need to figure out the type of account that's appropriate for us. And basically there's a couple kind of accounts. You've got a brokerage account or a taxable investing account, and you have an individual retirement account, an IRA, which comes in two forms, traditional and Roth, which I'll get to in a second. I'm going to start with the brokerage account here. The brokerage account is wonderful because it is an account that you could put money in or take money out of whenever you want. So I like these accounts for interim goals, meaning things I want to do before retirement. Like I said earlier, buying a home, buying a car, taking a vacation, whatever goals you might have, the brokerage account will help you check that off your list, meaning satisfy those goals. Now, this brokerage account is taxable, ladies and gentlemen. I have to stress that it is a taxable account. So when we found our platform, we've opened a brokerage account, we've funded it, we've got it invested. Year after year after year, you will pay taxes on the money you make. And basically, the taxes that you'll pay will come in two forms of what's called capital gains taxes. There's the short-term capital gains taxes, which if you buy and sell something within a year, you'll pay short-term capital gains. If you invest in something a year or longer, those are long-term capital gains. And short-term capital gains rates, basically your income tax bracket. So that's different for everyone. For the long-term capital gains, it's a straight 15% across the board. No fuss, no muss. You know exactly what you're going to have to pay if you hold an investment for a year or longer, whether it be a mutual fund or an exchange-traded fund or a stock, a bond, whatever the case may be. The capital gains rate will be 15%. Now I'm going to add a little bit extra on this one. There is what's called dividend income taxes, and that is 15% as well. And dividends are just income earned from owning equity investments or stock investments, or if you have, like I mentioned earlier, the Vanguard Total Stock Market Index Fund, or the Vanguard S&P 500 Fund, or the NASDAQ 100 Fund, there'll be some dividend income there as well. So be prepared and know that you'll have to pay these taxes. You will get a 1099 at the end of the year. So just know that whether you're going to pull from paycheck money to pay those taxes or pull it out of your account, there's no surprises here. There will be some taxation. But again, they are wonderful for saving for those interim goals. Now, on to the IRA, the individual retirement account. Like I said, it comes in two forms. The traditional IRA as well as the Roth IRA. And there's a difference here. The traditional IRA allows you to make a contribution to that account year after year. And this year it is $7,500. So in 2024, you can contribute up to $7,500 into an IRA. Now here's the difference between the traditional and the Roth. The money you contribute to the traditional, you get to write off of your income taxes, okay? The money you contribute through the Roth IRA, you do not get to contribute, or excuse me, write off of your income taxes. So the traditional has the tax write-off today, the Roth IRA does not. But let's say we put money in both. The money will grow, and while the money is in there and it's invested and it's growing, you don't pay any taxes on that growth. That's called tax-deferred growth. Now, in retirement after 59 and a half, when you can touch this money, just like your 401k, your 403b, your 457, or maybe you're a federal employee and have a TSP, okay? In retirement, once you withdraw the money, there is a little bit of a difference here. On the traditional, remember, we got the tax write-off today, but in retirement, after 59 and a half, whatever we withdraw, we pay ordinary income taxes on. On the Roth, remember, we didn't get that tax write-off today, but the money went in, it grew tax-deferred, and most importantly, guess what? You get to withdraw all that money tax-free. Let me give you an example. So let's say we put $5,000 into a Roth IRA for 2024. Money grows tax-deferred after 20 years, I don't know. Let's say you've got $45,000. That $45,000 you get to withdraw tax-free. So the younger you are, the more beneficial that Roth IRA is in the long run. But remember, you've got to balance both the traditional and the Roth out based on your own income level, tax situation, etc. And there might be years where the traditional is better for you, and there'll be some years where the Roth is better for you. So take it on an individual basis and take a look at it year to year to determine which contribution is best for you, traditional or Roth. So now we've got a platform. Now we've got a type of account, a brokerage, a Roth, or a traditional IRA. Now we need to fund the account and invest our money. So for beginning investors using Fidelity and Vanguard, one of the nice things that both platforms have, and by the way, you can flip a coin, neither is better than the other. Both are equal across the board as far as I'm concerned on this front. Once we've opened the account, we've got it funded, then we need to take a look at what types of investments we want to choose. This isn't an allocation, or excuse me, an asset allocation video, and we'll get into that later with other episodes, but I'll tell you what, Vanguard and Fidelity have wonderful lists of all of the investments they offer, and you can use investments from other companies as well. Generally speaking, if you're a beginner, you will be using mutual funds and you will be using exchange-traded funds. And basically, these are funds that are a basket of stocks or a basket of bonds or a combination of both. So instead of buying one stock like NVIDIA, AMD, Rivian, whatever the case may be, you're buying a fund that will have all of those companies in there and then some. The most important choice you make is right here with your investing for you beginning investors, especially with that buy and hold strategy. And I'll tell you, I highly recommend you go after index funds first. Go after that moderate growth with the S&P 500, all right? Go after that total stock market approach with a total stock market fund like the VTI from Vanguard, or the VOO in the case of the S&P 500 fund. Great places to start. And by the way, you don't just go in there and invest once. Hopefully you'll be able to set up what's called dollar cost averaging, much like you do with your 401k at work or your retirement plan at work, right? A little bit of money goes in every month. If you want to learn more about those funds, check out the websites, but better yet, shoot us an email at touchstonefinancialeducation.com. We'll answer any questions you might have. If you are more interested in a personalized service, again, reach out to us because we do hourly consults as well. And of course, we'll reach out to you within 24 hours. Thank you everybody for watching and listening. And please like, follow, share, and subscribe. We really appreciate it. And if you have any comments or if you'd like to hear us talk about something, again, also reach out because we do shape these videos around what our watching public and our clients want to see. Thanks for watching.